It is Monday, December 8th, 2025, and the U.S. markets have just closed. Strive Inc., ticker ASST, finished the session trading at exactly $0.90 per share, down a significant $0.076 or 7.79% for the day. While the after-hours market is showing a slight tick upward to $0.91, the headline story here is that red candle on the daily chart. On the surface, this looks like a classic penny stock capitulation, a company drifting below the crucial $1 compliance line, bleeding value while investors head for the exits. But if you are just looking at that percentage drop and scrolling past, you are missing one of the most complex, high-stakes arbitrage situations currently unfolding on the Nasdaq. What looks like a failing tech microcap on your screen is actually a mispriced hidden treasury vehicle that has undergone a radical transformation in the last 90 days. The market is pricing this like it is still Asset Entities, a struggling Discord marketing firm. The reality is that this ticker is now Strive, a Bitcoin treasury company backed by Vivek Ramaswamy's firm, currently holding over 7,500 Bitcoin on its balance sheet. You aren't looking at a tech stock anymore. You are looking at a closed-end Bitcoin fund masquerading as a penny stock. And right now, it is trading at a discount to the raw value of the crypto it holds in its vault. That expectation that this is just junk being sold off is your edge. The reality is that the selling pressure we are seeing today is likely a mix of confusion regarding the ticker change, fear surrounding their recent preferred stock offering, and typical short seller aggression targeting reverse mergers. When a company radically pivots its business model, algorithms and legacy shareholders often get spooked and sell automatically. This creates a dislocation where the share price disconnects from the book value of the assets. Let's break down the intraday action. Before we get into the napkin math on their Bitcoin holdings, the stock opened higher at $0.98, tested the highs, and then faced a consistent grinding sell-off throughout the session, bottoming out at $0.88 before closing at $0.90. Volume was heavy, which suggests a battleground. This isn't just retail panic. There is institutional rotation happening here. The stock recently slid 40% over the last month. Why? Because Strive just executed a massive capital raise, an IPO of their SATA preferred stock, to buy more Bitcoin. The market is terrified of dilution. Investors hear offering, and they sell first, ask questions later. But here is the contrarian take. That dilution was used to buy an asset, Bitcoin, which has been ripping higher. If the value of the Bitcoin they bought increases faster than the share count dilution, the intrinsic value per share actually goes up, even if the stock price goes down. This brings us to the core of the Strive thesis. Until recently, ASST was Asset Entities Inc., a company that provided back-end services for Discord communities and TikTok marketing. It was a low-margin, high-competition business. In a move that caught almost everyone off guard, they reverse merged with Strive Enterprises, a firm known for its anti-woke asset management stance. The goal? To turn ASST into a Bitcoin treasury company, similar to the early days of MicroStrategy. As of the latest filings in November 2025, Strive reported holding approximately 7,500 Bitcoin. Let's do the math on that right now. If we assume a Bitcoin price of roughly $100,000, given the recent market context and their average buy price of around $103,000 mentioned in reports, that hoard is worth roughly $750 million to $775 million. The current market cap of ASST, with the stock at $0.90, sits around $730 million. Do you see the anomaly? The company is trading below or at parity with the liquid value of the Bitcoin it owns, assigning zero value to its operating business or its ability to raise future capital. Usually, Bitcoin treasury companies like MicroStrategy trade at a massive premium to their holdings, sometimes 2 or 3 times NAV, because investors pay for the leverage and the management's ability to acquire more coins. Strive is trading at a discount. Why? Because the market doesn't trust it yet. This is the tension I mentioned earlier. The expectation is that reverse mergers are scams or desperate attempts to stay listed. The reality is that this might be the cheapest way to buy exposure to 7,500 Bitcoin on the public market, provided you can stomach the volatility. Now, we have to talk about the short side because a drop of 7.79% in a single session often smells like blood in the water for short sellers. Reverse mergers are a favorite target for short-selling hedge funds. They bet that the hype of the new business model, in this case Bitcoin, won't materialize fast enough to cover the cash burn of the old business. For those of you holding or watching ASST, you need to be hyper-aware of the borrow fee and fail to deliver data. When a stock transforms like this, shares could become hard to borrow. If short interest is climbing while the stock is near these lows, we could be setting up for a squeeze, but only if Bitcoin itself makes a massive move upward. The risk for shorts here is asymmetric. If Bitcoin runs to $120,000, Strive's balance sheet suddenly balloons in value and the $0.90 share price becomes fundamentally indefensible, forcing shorts to cover. However, if Bitcoin corrects, Strive acts like a leveraged downside ETF. It will fall harder than the crypto itself. I want you to pause for a second and check the sentiment on this. Go to the comment section right now and tell me, do you trust Vivek Ramaswamy's team to manage a Bitcoin treasury, or do you think this is just a way to capitalize on the crypto hype cycle? I want to know if you are buying the jockey, management, or the horse, Bitcoin. Let's shift to the specific mechanics that are driving this fear. The company recently issued Class A preferred stock under the ticker SATA, which pays a 12% dividend. This is an aggressive move. They're essentially borrowing money from preferred shareholders at 12% interest to buy Bitcoin. If Bitcoin appreciates more than 12% a year, it's a genius move. They're creating free equity value. If Bitcoin stagnates or drops, that 12% dividend becomes a noose around the company's neck, forcing them to dilute common shareholders, that's you, the ASST holder, to pay the preferreds. This structure is what is likely weighing on the stock today. The common stock, ASST, is junior to the preferred stock, SATA. In a bankruptcy, SATA gets paid first. The market is discounting ASST because it carries the most risk. But the smart friend perspective here requires looking at the macro environment. We are in late 2025. The regulatory environment for crypto has likely shifted with the new political landscape. Strive is positioning itself as the America First Bitcoin Treasury. This branding is powerful. If they can tap into the retail investor base that follows political and cultural trends, the stock could decouple from the cold, hard math of the balance sheet and start trading on sentiment, which is where the 10x moves happen. We also need to look at the chart technicals. At $0.90, we are sitting on a razor's edge. The 52-week low is around $0.34, but that was likely before the merger was fully priced in. The recent support has been around the $0.85 to $0.88 level. Today's low of $0.88 defended that support. If 0.88 breaks, we could see a flush down to $0.75 as stop losses get triggered. But if we can reclaim $1, it triggers a psychological shift. Stocks under $1 are viewed as distressed. Stocks over $1 are viewed as investable by many institutional charters. The battle for $1 is going to be the defining narrative of the next 2 weeks. Let's broaden the scope to the sector. We are seeing a divergence in crypto-linked stocks. Miners are struggling with hash rate difficulty, exchanges are dealing with volume fluctuations, but treasury companies, firms that just hold the asset, are becoming a distinct asset class. Investors like them because they don't have the operational risk of a miner, machines breaking, electricity costs. Strive's operational cost is low. They just need a secure custody solution, which they have via Coinbase or Fidelity typically, and a small management team. The risk is purely financial, not operational. There is also a fascinating retail sentiment angle here. If you look at forums like Reddit or Twitter, the confusion about ASST is palpable. Half the users are asking, what is asset entities? And the other half are screaming, it's Strive now, buy the dip. This information asymmetry is an opportunity. By the time all the databases, brokerage descriptions, and algorithms update to fully reflect Strive Inc. Bitcoin Treasury, the repricing may have already happened. You are essentially front-running the metadata update of the entire financial system. However, I must provide actionable caution regarding the short report risk. In the world of reverse mergers, it is common for short-selling research firms to publish hit pieces, claiming the merger is a scam or the assets aren't there. If you see a sudden high-volume drop of 15 to 20% in a single morning without official news from the company, it is highly likely a short report has been released. In that scenario, do not panic sell. Go find the report, read the claims, and see if they are factual or just fear-mongering. Usually, these reports target the old business, asset entities' Discord marketing services, which is irrelevant